Okay, hello guys. G'day Bobby. Good to see you well, mate. We'll just wait. Probably a few more people coming on soon. Dribs and drabs. We'll get up and running anyway. We'll get the thing started. So welcome to Trade Setup and live stream. We're now the 15th of July, so into the new financial year, which I guess everyone's happy about. It's now tax time. I mean, it's love doing our taxes, especially if you're working for yourself. It's time to pay tax, not receive anything. G'day, Laura. Daniel, how are you? Anyone that's new, top left-hand corner, you'll get our trade_setup at Twitter. So join us there. Top right is Facebook, and the bottom right, subscribe to us at YouTube. So anytime we go live, you'll get a push notification from then, whether it be just a general chat like we're doing now, or some webinars down the track. We're gonna bit by bit we'll get them active. We'll see how we go today. Hopefully my voice is a bit clearer. Still got a bit of a cough. G'day, Jason. Cans. Mate, I wish I was back up there to probably clear up the chest a bit better. Yeah, so hopefully we can get today without having a bit of a coughing attack. So if I do go offline, you know what's happened. But I think it's getting better anyway. I don't feel as miserable. I think it's more miserable because I've just come back from holidays than anything else. But feeling a bit better. It's just that chesty cough. It's, a bit phlegmy, but that'll clear up soon. Not with the weather down here, that's for sure. It's been miserable since we got back. Hope everyone had a great weekend. What I'll do is minimise this now. There we go. And transition that. There we go. So hope everyone had a good weekend. Not too concerned about the markets at the moment. Bit of a drop today, which is unusual. So we'll go through just views of what's going on and what we're looking at, all your bits and pieces. Friday night in the US, as we probably know by now, was pretty good. I think the S&P finished an all-time high, so above that 3,000 mark. Okay, Pete. S&P above 3,000 and the Dow into new highs as well. We'll just take a look at those now. Where's my S&P? It's been unusual. So S&P, there we go. So it just touched off. It's triggered. It's actually pushed through 3,000 a couple of times, but hasn't quite finished above that. I think the closest it got was 299. There you go. On Friday, pushed above and finished above. So finished at all-time highs. If you look at that, that's actually that's still bullish. You've got the markets pressing up, had a bit of a pullback, corrected, took out those lows. Sorry, little double bottom there, crept its way higher to the end of 2018, where it sold off quite heavily. That was a big washout of this leg up. So this was, did take out a few people obviously, but this is a much deeper correction, especially when you pushed down sort of 2,600, bounced up and got contained at 28. There was obviously a bit more fear at that stage, which really drove the market lower through 2,400. Bounced back pretty much since December, straight back up to the highs, pull back, sitting on top of the MAs again. This is a weekly. Sat on top of the MAs and up and straight through. So yeah, it's still to me quite strong. There's no reason to be bearish on it. I mean, the only reason to be bearish on it is from talk. What's happening, but that's second guessing the market. That's trying to guess, the market's coming down because of what people are saying, what the bears are saying, trade wars, all that sort of thing. The fact is the market's going up in the face of all that. So earnings out in the US, which could be, I think it starts this week. I'm not sure what days they come out, it could be tonight.
That might sound a bit better. Is that a bit clearer? You know why? I had my little mouthpiece pointing up. Can you hear it a bit better there, guys? Just let me know. Call me a goose if you want. Yes, much better. All right. No one's called me a goose, and that's nice. Very polite of you all. So trading up through 3,000, it's in the face of what we're just talking about, all the trade wars, tariffs. So it'd be interesting to see how it goes through their earnings season this week. like I said, I'm not sure when that kicks off. It could be tonight. I'm not sure the actual day. It might be later on the week, Thursday or so, when they start kicking off with the earnings. They're expecting it down, earnings down from previous quarters, which is, I guess, is expected. So it'll be interesting to see how people take it, because the market's trading into all-time highs. Earnings is slowing. Are they banking on the fact that if trade war stops, they're going to lift? What's going to happen? So it's just sort of those uncertain times at the moment where when you trade into all-time highs like we're seeing now, especially in the US anyway, you trade into all-time highs, there's always that bearish sentiment, why it should pull back, why it should do this, why it should do that. Like I said, the fact is it's going up, and you can't argue with that. Now, our market, so that's S&P, Dow, also the same. That's on the weekly, the daily closing, again, new all-time highs. So looking very strong over there. DAX, go back to the weekly, still pressing higher. A couple of down days, down weeks, the last few weeks. But again, that's just gone to new highs. So you'd expect that swing sort of low, build a higher low, go again. FTSE, they're still getting through Brexit, so they've got their concern sort of capping their market. But still, that's edging higher, has been all year. Not as positive as the US, even our market, I'd say. But yeah, heading in the right direction. Let's look at that's the XJO. So I still think we're going to trade very shortly into new highs. We got very close, was on the 5th, very close on the 5th. I think it's 68.50. We got to 67.69. I still think we could be ticking higher. And just remember, if you look at this trend, is still up. This is what's going to drag in a few sellers. It's going to, and potentially just to get cleaned out. You can see that lower high just coming into play. Just thickening that up a bit. This is important. It's important just to notice if the market's sort of mucking around, if it's going to squeeze people or not, what it's actually trying to do, or whether it's serious about a bit of a correction. You can see on the here we go, on the ASX that you've got this move up. I'm going to change that. Up, pullback, up, little sideways movement, up again, sideways. So the most recent pullback before this trade up into the highs is leaving the anchor around at 6,600 mark. So even though we've pulled back, we've come up, and the last couple of days, say Friday and today, have been negative, and that would lead someone to believe, a lot of people to believe that, okay, lower high comes into play. We've just touched back on this low. What was that? 66.50. It's a confirmed lower high. There's going to be some selling. We're going to break down. This is the end, the start of the end sort of thing, as the bears would believe. But the fact is, it hasn't broken that anchor. I think that's the most important thing. This is a swing low, the anchor for this little pop up here. So what this sort of price action to me is doing is more cleaning people out of the way for a move back up again. It's a lot different to, it happened here. The market sort of corrected lower. There was a good one, if I can remember, a while ago, which we had our eye on, but it didn't. I think it was this price action here. If you can see, the market pressed up, and really this little pullback here was sort of the anchor. Then you had that press up, and then it cleaned out. It was choppy, a bit of a washout here, but it really only touched back on that same level, and that was a low of 6106, say 6100. Washed out, didn't finish below, and then started to rally again. And the same sort of thing, this sort of clean out here, didn't break any levels. Really, just you can see that sort of choppy action. A couple of red days, green day, and that just drives the fear into people. It's fear what drives the markets, not so much fundamentals. I mean, the closer to, well, that's probably a stupid comment really, but fundamentals do drive it. But when people are sitting on profits, they'll get out. They don't care about fundamentals anymore, and they'll book profits. They'll start to read, why they should be out, or back on the sidelines. They don't want to give up profit. All these sorts of things that play with your mind. So these little lower highs can really start to put the squeeze on people, especially at highs when you're grinding up to we're not far from our all-time high. People are looking for a recent exit. So just be careful of that, I guess. The market hasn't broken down yet. That trend is well established. It's still intact. It hasn't changed one bit since the start of the year. Still driving higher. We're driving up to the all-time highs. You get these little bumps, but these sorts of lower highs, especially without breaking the anchor, like we're just saying in here, are engineered just to squeeze people out, put them back on the sidelines, and then once they realise they've missed a boat and it's going back up again, and there was no reason to be out, they'll start chasing it back up. Because if you trade into all-time highs and we don't look back, this is going to drag all the bears in that have been talking it down, maybe squared up for no reason apart from that we're on the highs. And this, people do that time and time again, and it's the same when you buy. Okay, it's down, it's oversold, let's buy it. It can always go more oversold. It's not the way to trade, in my opinion, anyway. To try to pick the bottom and pick the top, you got to wait for confirmation. And if you're going to sell it, you haven't got confirmation to get out just yet, in my opinion, anyway, on the ASX. So that's leading me to believe that, we're going to drag higher. And you can see this. Look, it is a well-established trend, but before we broke up this high, we've been overextended back in March, overextended all the way to trade into new highs now. So being overextended is no reason to get out. It's the technicals that should be telling you when to get out and what you should be doing. We're overextended here, yeah, but we can be back at 7,000 before you know it, still overextended. And you've missed a couple of 100 points of gains, on the stocks you're following. So that's the ASX. I still think we're chugging along quite nicely. A bit strange how we did. I don't know if anyone noticed that. We sold down through, I think, the European session, the US session on Friday when the US was dragging higher. I'm not sure whether let's actually just check whether they opened up and went down. Just get that intraday action. So no, they pretty much opened. Yeah, opened at 10:30, 11:30, sorry, and just continued to push higher, whereas we pretty much sold down. We just drifted lower. So we were down, pretty much expecting to open it down 30 points when the US was positive. And Europe too wasn't, they weren't too bad. I don't know what they did into the close. They might have been a bit more. Yeah, so they got knocked over into the close there. That's a DAX. FTSE, they got sold down into the close. What was that from? Yeah, so they close obviously at 12, was it 12:30, 1 o'clock on the FTSE. They don't have the full US session, so the US that you'd expect the FTSE to probably open up a bit stronger tonight. Sorry. And what time do they close? 1 o'clock too. So they missed a good part of the US session anyway. So we'll see how that goes. All right. So what I wanted to just go over today, basically as a topic, considering what we just spoke about with the market, heading into highs, it always gets a bit tough. It's a lot different to trade. When it's at the start of a trend, it looks like it's going to start to trend. It's a lot easier to trade there, knowing that, okay, you're probably jumping in nice and early. The market's what's happening is going to be in the unknown, and that's essentially what you want to trade in is the unknown, and then selling in the known. So we're now at that stage where it's known. The market's trending up, it's pushing higher, it just continues to push higher. So really, it's about timing. Do I get out now? When do I get out? Do I get out at all? Do I just hold on? Do I load up? Do I not load up? All those sorts of questions go through your head. But I think at this time when we're pretty much within throwing distance from all-time highs, just being careful with your setups and your entries. And I think I've banged on a bit about what I look for, but we'll just go over that anyway. I thought it was a bit of a chat topic, and then we'll get into looking at some stocks. Oh, that's not what I wanted either, was it? I'll close that down. I'll open it again. Now, where is it? So what I want to go over is just what I look for when we talk about high probability setups. I mean, it's easy when the markets, if that's just a natural market, well, probably way back, it's probably a lot easier to see. When we're back here, let's go on to the weekly. That was the bull market. What was that since 2003 or so? If we go back, 2003, it was just a bull market for years and years, just keep edging higher. We're in, I think, a different scenario, and now that was in clear skies. So each move up was in clear skies. It was blue skies. It had a bit of a correction back to the mean, reverted back to the MAs, and then took off again. So it was a lot easier to trade. when the outcome was known, it was pretty much known, you'd say, somewhere now through 2004. Then you had 2005, 6, 7 before we got the major sell-off. So markets were in bull market territory. A lot easier to trade, I'd say. You could basically pick something, and if it didn't go up straight away, probably eventually go up. I mean, it's hard to get knocked about with the shares you're picking. Sorry, just have to get rid of that. It's my brother calling. He's going to love that. So yeah, it was a lot easier to trade. So I think we're in different territory now where you've got to be a bit more careful with what you're trading. So trading something like that, for me, where am I? Here we go. Why won't that come over now? That's enough. Excuse me, sorry about that. So when you're trading the bull market, you could just be not too concerned about what you're picking, and you're trying to pick the market's going up. Whether you're looking to trade in the pullbacks or you're trading on breakouts and new highs, whatever your style is, it was probably going to be fairly easy to pick. You can pick there. You didn't have to worry too much about, you can have sort of loose risk management if you had risk management at all, because the probability is most of the time you're going to pick something that's going to go back up again, and it was just trading, higher, higher, higher. Generally, that's the idea. For me, at the moment, we're in different territory, and people are probably feeling it a bit harder. It's a bit tough to pick something that's going to kick on at the moment, and you've got to be really selective. You can't just pick something. I mean, there's ones that have been trending higher. My feeling is that if there is a bit of a turnaround, we get into all-time highs, and we start rolling over, then let's get rid of all that. Then they could be the ones that, especially if fear starts gripping the market, they could be the ones that really tip over because they're well-established trends. There's going to be a lot of people running for the door at the same time, as opposed to something where you've got, and this is what I'm looking for, and I'll go through just the reasoning why. You're looking for something that's popped up. This could be the weekly. You're looking for that first sort of a correction on the weekly chart, and it could be coming out of a nice base building. It's built some consolidation. It's starting to pick up. This is your first, when your MAs are starting to roll back up again, your first pullback to the MAs. And for me, I'm always looking for something around here, basically on the weekly. And I'm looking to get the daily when the dailies are setting up as well. So I like that sort of pullback. So for me, that's come out of a nice consolidation period where it's had one leg up, and you get the aggressive traders, maybe the fundamentalists are buying it for a particular reason. It's popped up, and then it comes on the radar of a lot more people, and you're looking for that secondary push. So you're looking to take advantage of potentially that secondary leg up before you maybe have a decent correction again. But generally, there's going to be a lot of fat in that trade. Well, for me anyway. No, I don't. Sorry, Paul. Never touch it, mate. I'm just subscribed to it, and they just keep sending me emails. I just keep deleting them. Yeah, so I'm starting to take a chunk. What I'm ideally looking for is to take a chunk out of, that move there. I don't know whether I'm going to pick the high or whether I'm going to pick, get stopped out when it pulls back again, or what's going to happen. But I'm ideally trying to take a chunk out of a nice, potentially longer weekly trend higher. So and I think I was saying this last week, what that would stop me from doing after it's had a good little pullback and consolidated. And by the time I'm looking for my entry, I think if the market rolls over, these for me are a higher probability setup. I think it's had that squeeze on the weekly. It's squeezed out a lot of traders, so they've already been put on the sidelines, and it's building for that secondary leg up. Maybe if the market does roll over, what it could do is just really constrain how far it can go, or the potential rally. But a lot of the times, even if the market's negative, some of these will just keep going because people will look at that individual stock. It just depends whether the market's in a free fall. The overall market, the global market's in a bit of a free fall because of fear, or whether it's just in a pullback mode where people are just taking some risk off the table and it starts to find a base, it starts to go again, potentially like we have been the last couple of days. So if it's in that sort of mode, I think picking these stocks with a high probability setup can really negate any of those pullbacks you can have to sit through or you have to weather. And I think it'd be really, for me, I find it good as a bit of a hedge, like I said, to the bigger, rollovers which you might have on the ASX or the US, when they really get smashed, um, because the stocks you're picking they haven't just gone up over the period of the last 6 months to a year and in a trend. So these sorts of stocks, for me, I find, I really struggle to buy something when it's in a well-established trend, and it has been for a long time, purely because I think everyone's positioned the same way. It's no longer the known at all, and this could be broken down into weekly. This move here, weekly up, down, had a fair few weeks to really put on those gains. Before there's nothing. That trend is higher. It's up, but it's been up for quite a while, and I think everyone's positioned long. And if you do get that fear that drives the market down, if you bought it down here, you don't, and you think your world's crashing down around you, it's probably going to be something like that you take off the board, locking the gains before everyone else does, because you think sooner or later this is going to cop it as well. The market's crashing, da 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 da. So I think these are the ones which have got a lot of fuel for a bit of a pullback. Maybe they don't. I just find them lower probability bets to trade something that's had a well-established uptrend in such an uncertain environment. In a bull market, fine. They're kind of easy. You just pick them, off you go. So for me, in this kind of environment, what I'm looking for is to buy potentially in that weekly trend. We've had that weekly pullback. We're in that secondary leg up, and it's out of some sort of contraction. After it's cleaned out a few people, and it's resetting itself, building higher lows, and looking for your daily entry. And most people know that's my daily entries, potentially something like this. So if that's let's just draw that in red. This is your weekly move. In green, what I'm looking for, a couple of legs lower, holding the anchor potentially, or it can break the anchor. It doesn't really bother me, but enough of a secondary move lower to clean people out. And then you want to see buyers start to step in at potentially higher levels, and then start to see that higher levels hold, MAs roll up, and away you go. So the MAs are up on the weekly. They don't cross. They just contract into themselves. Potentially the MAs can cross on the daily, and they cross back up, and then you're looking for that entry off the MAs when it's high probability setup. You're going with the flow on the daily as well as the weekly, and then just see how far you can ride it, and using just to, raising your stops on your weekly charts, on your daily charts, just to protect your gains. So that's the idea. One that we just got into is MVP, and that's not where we got in. That's where we got in. So on this one, just looking at the weekly, you've had this big leg up, pullback, big strong leg up, and you had this big pullback here. And what we've done, we've popped up to, say that was just below $6, big retest, and now this is the leg stuff. This is a big double bottom retest. We've got all the washout after a big correction lower. What we're looking for is to take advantage of this move up, and you can see it did start pressing higher, failed a bit below that previous high at, what's that, 584, before we pulled back. So this is, you can see we took out the anchor. Let me just draw this up. It's probably a bit easy drawing it up, isn't it? MVP. So this is something, potentially what I'm looking at. Well, we're in. This is something similar. So you've got, a good base build through here. That was your high, your first high you're sort of contending with. If we can draw that straight enough. The price action's come down. You've got this corrective action off. So that's your first time you reacted off the lows. Then we come back down, holding lower highs, back into that zone, retest it before we failed again. So that's good confirmation when you start to lift again and you build those higher lows, like here, that the market's lifting. That's your line in the sand, I guess you'd want to say, where things, your fundamentals are thing that's well over extended to the downside. It's well undervalued for what they're doing, whatever reason, but your technicals would be looking for, especially after your double bottom, you're looking for those higher lows. And it started to lift back up to 6, but then this is, if you can see, this is what, it's our first sort of a weekly leg up, and this is your anchor. So that's your leg up. We broke through the anchor, so 1, and then we started to really contract with some lower highs in and some higher lows, and then it's only just recently we started to lift. So we bought into it just about 581. It was actually today it triggered. So that you can see the market's lifting. It's got this sort of cup and handle. if anyone doesn't know, cup and handle, if I can draw that, pressed up, pull back, and we're looking for that secondary move higher. And it can be broken down into some little squeeze. You've got a lower high, some lower highs in here, a big, higher lows building through here. So it's really just at that stage, who's going to win out? You sit there green, that pop up, pull back, retest that the higher low, and then we started really breaking out on this day. So that's, to me, was a good sign that, okay, the bulls are taking charge. We've got our good leg up. We've gone through a corrective phase. We're starting to come out the other end of that corrective phase, and we're starting to run higher. So yeah, we'll just see if that can kick on. But that's the kind of price action that I'm looking for. I think this could be pretty good. I think it could really start to go. It's just broken through the previous high way back, just below 6. It's gone through 6. But yeah, I think that's a high probability setup considering all this price action that's gone through. So this could potentially, or if you just take it from lows to highs here and low to high, you could be somewhere around 750 before you know it, which you would expect potentially to trade up to the highs at $8. A few resistance zones to get through. We're coming on one about now, but hey, the price action I think is going the right direction, and you're on the right side of it rather than trying to buy when it's tipping over here. Does that make sense? All right, so we've done 28 minutes. So that was just one. I can't remember anything else we got. LCK is another one. We got into the same sort of thing. It's had a good press high, and it's spent a lot of time cleaning out. Maybe it's early on that little pop up through 28. So I think we got it, 28. It's had a bit of a pullback today, a bit of a clean out, but it's off higher lows. So you got low here, pressed another higher low. So sooner or later, you would expect that to start to lift. And I think that's the start. You handle here, a bit of a cup forming, and you'd expect that to press back up to the highs at 42. So all this action here with your lower highs pressing down is just cleaning out a lot of traders from this leg up that have really got in nice and early, squeezed up. If they're not building a big position for much higher levels, the shorter term traders might have taken this leg up. They've been squeezed out. They've taken the gains off the table, maybe resitting, watching it again, and looking for that to start to lift again. So this is enough time for me anyway. Enough time has gone past really to squeeze out, and it hasn't corrected that much. You probably find that 22.5 is roughly, give or take, around 50% retracement of this leg up. So yeah, there we go. All right, now we've got some stocks in there to have a look at. So feel free to put some stuff in. I thought I just wanted to go through the reasoning, what I'm looking for, what sort of entries we're looking for, which you're trying to go, as much as possible, you're trying to go with the flow on your, so you're not really fighting the weekly. If the weekly's in a pullback mode and you're going to trade a daily breakout or something like that, you just got to be wary what the weekly's doing, and sooner or later, it's probably going to be a short-lived trade. You've just got to be on your toes, know where your risk is, especially in this market environment, because if it's a weekly, it's heading south, and you're trading off the daily chart, not really noticing what's happening on the weekly, and the market rolls over, bang, you can get caught pretty quick because there's a lot of pressure from the weekly. But if the pressure on the weekly is up, the bias is up on the weekly, and you're just looking for this pullback on the weekly, and you're looking to buy back into the secondary leg up, then that's what you're basically aiming for. Well, that's what I aim for anyway. Everyone can do as they choose. First one in, IRI. God, they got smacked today. What happened there? Profit guidance is obviously not good or underwhelming. Integrated research. So that one was probably not looking too bad for now. On a good announcement. Okay. So maybe that's, the thing is, this is what you be careful with announcements too. If it comes out in line, potentially it's been factored in already. People have been factoring in some good guidance. It comes out, bang, in a market like that, they just go, I'm out, taking the profits, book some gains. They're not willing to hold it. I think the environment at the moment is, it's harder to hold a position. You can't just buy and hold. It's really hard just to buy and hold and leave it and watch it, because there's going to be sort of lots of dips along the way. People are tentative at the moment. They're not willing to put too much risk into the market. And look, like I said before, they could be the ones that are left on the sidelines. If the market just keeps creeping through all-time highs, we break into new all-time highs, we don't look back and just keep dragging up. People are waiting for that pullback. Sooner or later, they're going to have to make a decision. They need to be into the market. They need to be involved in the market if it's going to trade into new highs. It's not looking like it's going to pull back. So this is why people get caught out a lot. Trying to guess the top, you don't try to pick the top or pick the bottom. You're trying to pick chunks out of the market. If you try to pick the bottom and the top, you generally, I think your stack's going to be, you're going to be left on the sidelines when they just keep going, and you're going to miss the, or you're going to get stopped out of too many when you're entering. So I think it's fraught with a danger. It's probably going to hurt your bottom line or your stats if you're just trying to pick tops and bottoms. So you just try to see, trade off what the market's telling you. Yeah, so that, I'm not sure, profit guidance, it could have been good, eh? Let's just go back to the weekly. Big volume today has come through, so there's a lot of people thinking the same thing. I mean, in all honesty, that weekly is not super bad. You just have to wait and see what happens. It's the first time it's sort of traded down, so you've seen markets pressed up, big pullback down to end of last year, popped up with the rest of the market, consolidated through here, through 220 to 260, 280, consolidated, so that's a good sign. And if you can buy it nice and early, go back to the daily, somewhere in here, and these little pullbacks when it's not taking out the lows, it's holding higher levels, and it starts to break up, you can buy it in there. You'd still be on some gains at the moment, and you'd have to assess, because this candle's really thrown a spanner in the works. But on a weekly basis, it's pulling back to the MA. So if it just sits on top of here and it chops around, potentially for the next couple of weeks, it's going to clean out a lot of traders. But if it can reset itself above sort of that 280, 290 zone, then it could still be a hold. Whatever the news has said, I'm not sure, but I think you just have to wait and see. But you've got this candle, big rejection. It propped up into new highs, big rejection there, a couple of red days, but it was holding through 320. Tried to go up again, but it rejected to, trade into new highs. It sort of rejected up there as well at 350 a second time. Excuse me, sorry about that. Might be coughing in everyone's ears. So yeah, for now, I wouldn't be touching this if I was looking to get in it. I just have to wait and see. It could be longer term. I really want to see it reset itself, which could take a long time. It could take a few months to reset itself around that 3 mark before lifting and trading up towards that 4 mark. Or what I wouldn't want to see is a couple of days later, sharp reaction back up to 330 or so, because I'd be inclined to think that's going to be a lower high, and I'll just be steering clear completely. So IRI for me has got a lot of work to do before I even go near it. IFM. IFM looks good. Laurent, not held. ISX held. ELO, TSU watch list not held. Please. You're welcome, Laurent. So this one, if you just tick it off into the weekly, this is looking good. It's an uptrend. We've had a pop up here, pull back, consolidated around the MAs just above $1. Secondary leg up. So this is probably the one thing just to look at. I'm not saying to be concerned about, but just to keep an eye on. It's had a good leg up. Basically, it was at the start of the year. Good, strong leg up to 195. But look at the way, what we're looking at with stochastics. It's had that pullback to $1.65. It's still in an uptrend. It's still sitting on top of the MA. So all in all, the weekly's looking good. And it's had quite a solid sort of selling. So the way I'm looking at this is selling pressure from overbought towards oversold. The deeper it goes down towards oversold or in oversold territory, that to me is just a gauge of selling pressure or buying pressure. Buying pressure when it's going up, selling pressure when it's coming down. So the selling pressure is stacked up a bit, but the price itself couldn't get back down to that $1.50 mark, which is your sort of key anchor level to this uptrend. And it stopped at 165. So people were happy to step in at higher levels and soak up that selling pressure. So weighted numbers to me, just by looking at that, is on the buy side. Does that make sense? By looking at the selling pressures coming, a couple of good red candles here, bang. And then buyers have stepped in, soaking up any of that selling pressure that's coming through at 165 and looking to hold. So clicking down to the daily, you're on the right side of the weekly. You're potentially late to the party on the weekly, but there's no reason why it just can't keep going. And you're going to get a good risk reward. And probably this is something we should alert to soon. I might not have been watching this for a while. Thanks for that, Lauren. You can see this little pop up in volume. That was a couple of days ago on the 11th. So that was on the Thursday. Off that 170 market, reacted off 170 with some decent volume. It's holding higher levels as we come up, and we're starting to get a breakthrough. Potentially, if we get that through 180 today, it could be a good buy. You're getting the price contracting in, and I reckon if you draw that up, it'll be clearer. So what you've got there, price contracting down, you can see contracting up, buyers taking control. You know, your entry through 180, say, with your stop just below 170. And then you'd be targeting minimum of 195 and above and looking for that, you know, that leg up to continue. And if you can measure it from here to here, we've got 150 up to, say, 195, 45 cents to 165 is 210. So potentially up to 210 if it can extend through the high and not find some resistance or some sellers at that 195 zone. If it just looks like to trudge through like it has before through the highs, then you're looking up towards 210, maybe higher. So I think that's pretty good. IFM, what was the next one? ISX. That's a killer, that one. I hate looking at this. Then we're looking at way back here somewhere where it started to take off. That's your daily. And look at that weekly. I mean, that weekly's, if you bought around 20 cents, triple your money. But I mean, in saying that, you'd probably just want to be careful if you're looking to buy into that one. And if you held, I don't know where you want to put your risk there. So you've got this little minor double top here. Doesn't mean anything because the anchor's right down at, say, just below 60, say 57. That's your anchor to the uptrend. You've got a leg up, little minor double top. It has to clean out a few of these late buys to the party before it resets. Then you got this little minor double bottom, confirms that low around, what was that, 58.5, 58, before it took off again. So it could be doing that same sort of pattern. Presses high, pull back, pressed, failed at that high again, like it did back here and here. Maybe a deeper correction somewhere towards that 65. If it holds the trend up, consolidates around 65, and then goes again up through 77.5. So just, if you've got a bit of room, bigger wiggle room on that one, Lauren, then potentially just, you know, give it some room to move because nothing's broken down just yet. And this could be like we were saying on the ASX, the market presses up, that double top. People look at the double top that fail to take into account that it's the anchor to the trend up is well and truly intact. And for me, that anchor's got to be broken before the trend is broken. And if the trend isn't broken, you might just have to sit through a bit of heat. So that's looking good. ELO is another one. Ooh. That's right. We've been looking at these ones, haven't we? This one, the problem is it's got bugger all on the offer. 720, 22, 25, 29. You know, a few hundred shares there. It's very thin. So if you can have a go at this one, you probably wouldn't want to take too much risk on it. And there's been a lot of shares that look the same. You know, it's only traded 17,000 today. They're just not getting the volume that you'd love to see. So ELO, I do like it. You've had this good run up, pull back in. Excuse me, just one sec. Yeah, no, we've got this on the watch list. It's just, I think if you're going to take a long here, you can. Potentially, it's looking quite good. And the more it consolidates around that 725, above $7 even, the better. If you consolidate along there with this trend is rising, is good. So there's a lot of factors you've got to take into account with this as you're building your trade. And the reason why potentially you can go long, even if it's a bit late, you know, this is only really your second pullback, I guess, on your weekly. First pressed up, pull back to the MAs. MAs hadn't crossed down, second leg up, potentially buying it into here with an idea that's going to get through those highs at 851. But just looking at it on that daily, there's a lot of good factors that we like to see. Because it's always good to see some clean outs with the trend, all these sorts of things, because the market, it has to clean people out, put them back on the sidelines. If there's only a finite amount of people that want to get in, if signs are that they've been used up, and especially on this blowout up here, it's probably sucked in the last of the buyers that want to jump in. There's no one left to buy it and to push it into all-time highs. So if you're buying it up here, you've got to be very, very careful and very sharp to get out, very quick to get out, because you're probably potentially used up or soaked up all that buying pressure And that's, I mean, this is all theory, obviously. You never know how many people are watching it, willing to get in. But the higher it goes, the less people are going to want to get in at those highs. And especially not the pros. I mean, all they've built a position for sure already. And it's only really that, your retail that are willing to buy highs, thinking it's a well-established trend, it's going to go up. But don't forget that fuel that's in has to come back out. And that's your concern. If the market turns, like I was saying before, if the market turns, you get all that fuel stacked into it, they've got to come out, they're going to book profits. You don't just keep holding it. And it doesn't mean that everyone's going to come out. People got different reasons before why they want to be in, why they want to hold, all that sort of stuff. But it's all about energy and fuel and, supply, demand, all that sort of stuff of the markets. So what we're seeing here about this stage is the market's an uptrend. This one candle was blown apart. A lot of those late buys creamed them, and then the market's going sideways, and you've got this little pop up here, rejection too, through this level. That's, if you see something like that, especially after this kind of candle, and you've had this price action pretty much from, I'm saying that to the IPO too, when it come online, say it come online somewhere around $2. If you were holding it through this, and you're a big believer in it, you've done well. You've seen it trade up through $8, and you go, this is the one, this is my ticket, this is me retiring. And then you see this kind of price action, you'd want to bail. And if you don't, you just got to be a bit careful with your trading style, because I think, this one, they could just keep going, some of them, but that's very, very, very rare. That's just going to keep multi-bagger. Excuse me. So this kind of rejection through here, and it's taken out a few previous lows, blown apart, went sideways, consolidated. You've got this little washout of previous levels. Now, the fact that it didn't finish up above this level here is a concern. And you can see that by the next couple of days. Then you have to have, generally, if it's not going to go up after this sort of price action here, you're going to have a deeper correction. You're going to be looking for that deeper correction, and you're going to look for the other side to be tested or taken out. And that's, let me just draw that in a different color. So this is your first leg down. This is a little pop, and you're looking for that secondary leg down. You can probably take that down to here. But what we've done on the reverse side is something similar. So this is a good clean out, and you want to see that as a buyer. If you you didn't buy in here, or you're watching it go up without you want to see that. You want to see a lot of these traders get cleaned out. You want to see it put back on the sidelines, and the price actually resetting itself, ready to go again. And also, the good thing is we've just got colors. I like my colors. This is a clear level through here, and we've just washed that out and reject it pretty quickly with this green candle here. Well, these 2 days, I think it's very important to know as a buyer, as you're coming back into the market. So what you've got is it pull back, and you can see this, the kind of reaction up is the first reaction we've seen on the upside from the highs that have been savage. We've got this savage move down here, and then we've got the savage move up. Does that make sense? So as we're getting a bit ahead of ourselves up here, savage move down, clean out a lot, and it's bang straight back up. So it shows you that who's gone on the sideline is ready to go again, potentially ready to go again, because they're chasing the market back up, and they're feeling this is a good value. We've also cleaned out with this little drop through, cleaned out the lows. It's probably in line with these previous lows. I can draw that in a straight line. Yeah, this lows too. So we cleaned out a couple of levels before we had that spike back up. And you can see the action after that. These couple of red candles, really tentative to the downside. The MAs are still up, and what it's done is just set on top of the MAs before we start to lift again. So this price action to me is nice. After this clean out, this big clean out through here, put a lot of traders back on the sidelines. So if it's good fundamental story, this trend up could have some legs, and could be, and the way it's going up, it's not getting too ahead of itself like we did with this green candle, this sort of run up with near vertical. It's been a bit more contained. So if it's a bit more contained, that to me is getting a bit more established, and it's not a bad little idea or bad little trading opportunity. And you can see set on top of the MAs here, right on top of the MAs here. So potentially if it lifts up through high 735, it could be a goer. And then as long as it doesn't take out 7, if you buy it through a lift through 735, you know exactly where to put your risk. Risk could be down at around the $7 mark, and just adjusting your sizing accordingly. So that's not a bad one either. API, let's get onto that. So API, you can see that's still in a downtrend here, but we're going to have to go back to the weekly. Actually, you can see that through here. It is at a level where it's tested. Let's draw that up. Just the odd cough today. No attacks today, which is good. All right, so we've got a little zone through, say 120, which touched on 1, 2. Okay, couldn't get through this time. Had the deeper correction. You can see this basically move down. A deeper correction. It's going to take a second go at it. All right. So this really broke out. This kind of price action. You can see it wasn't too strong. It's just holding. It didn't. As soon as it broke through the highs, actually we're going to have to take it from that high. Took out the highs there, and the same. It spiked up through, cleaned people out, and that would have brought in some stops. Buy stops sitting above the highs, ready to go. Maybe their stops are way down here. Cleaned them out, finished down for the day. That's the week actually, down for the week, and then start to sell off. So you got this corrective phase here. It's come down. Okay, we don't know how many sellers or how many buyers are willing to get out at this stage. It's popped up, so it needs to, as it comes down here, it's got these 1, 2, can't get through that 120 zone. Okay, buyers starting to step in, sellers taking their foot off their gas, deeper correction, which leads to some further selling. Okay, the sellers, anyone that's probably holding through here that doesn't like it anymore, that wants out, it's had that pullback, they're willing to minimize their losses or just book a small loss, small gain, and get out here. Then you see that secondary wave of selling, first leg down, second leg down. Now that second leg down falls short again, and it's the third time potentially, and that's a lot stronger move once you see it fail here than we did the second time here. Essentially a double bottom when we're failing at that 125 zone, and then we've lifted again. Okay, we've got a deeper correction. It's the same sort of price action. That leg down, deeper correction. This leg down, a deeper correction again. Sorry, a deeper pullback to reset itself and just see if there's further selling coming. Sellers have come back down again, and again it's getting soaked up at around that 125 mark. So that's a good sign. You're getting soaked up every time it presses down there. So sooner or later, the sellers are just going to go, that's it, I'm done. Or if you're holding it long, this is giving you confidence that that is your line to stand. So, if you're at, say, 125, prices are trading at 125, whether you're sitting on a loss or a small gain, you roughly know what it is. And then you figure, okay, if it goes through there, I'm out. I'm going to bail because if it goes through there, this is rubbish. We shouldn't be doing that. But there's the odd chance it's getting soaked up there, and that's going to lead to some buying, bringing some stronger buying, or the flip side, some weaker selling. All the sellers that are willing to get out are being used up. So what that sort of action does, it can change the mind. At this stage, you don't know where it's going to. You don't know if it's going back to 50 cents, 60, 70 cents, or even 10 cents. You just don't know. And then once you start to get it pop up, you go, okay, that's a good little sign. There's still some really interested buyers. Maybe the story is still really, really good. Comes back down again. You go, okay, here we go again. Gets soaked up again. That's a good sign. That's a stronger sign again. Soaked up again here. That's an even stronger sign. So really that's showing to you that, okay, this is worth holding. Rather than just get out on the next little pop, let's just hold it. And my risk is now at around that 120 mark or 115 mark. And I know if it goes through there, I'm out. I'm bailing. And I think things are looking really rubbish. But if I can hold it and see what happens, see if this selling, the sellers just clear out, if there's a lack of selling, all the selling's been done, and see if some buyers start to step in from there. Because prices doesn't just sit around doing nothing. It's either going to go up or down, pretty much, consolidate. But then it's going to pick a direction. So at the moment, I think this is going sideways, but it's this zone through that 125 mark that's really the important thing, I think. So going down to that's your weekly, down to the daily, we're just starting to get up through 140 now, 139.5. We traded 140 today. If we can lift up here and then have a good pullback to build a higher low, I think that could be something to get into. But you just have to, it's all in context of what's happening on the weekly. I mean, the weekly's still trending down. MAs are down. It's just this line in the sand around 125. It's just how you attack that. For me, I'll be holding off. I'd rather see it press above the weekly. I want to see the weeklies cross up and then I'd like to see my first pullback to the weekly MAs. I mean, this is all going to take a long time. Pull back to the weekly MAs and see how that reacts, and then go down to your daily to see if it's going to sit on top of the MAs and you're going to start getting bought up and the trend is up and away you go. That's what I'd be looking for, as opposed to just buying it off that support zone. So at the moment, that weekly's still down, so this could just turn over. I could be completely wrong. Hold 140, boom, straight through, down at 70 cents before you know it. All right. All right. So what do we got next? API SIG. I think it's the weekly. It's a good one, isn't it? So I think this is later stage. It's a bit like API. So I'm probably going to sneeze now. Just one tick. Okay, maybe this is a bit like API, but it's at slightly later stages. You're seeing the market move above the MAs after trading down to 40, getting held up at 40, and then this high level at 50 cents. It's getting soaked up there. It's probably easier seen. 50 cents through here, and it's starting to lift again off 50. So that's really a high low from the weekly. You can see, okay, the market's pressed down. It keeps trading down, holding lower highs, bang, goes through again. So you don't want to get caught if you're buying it off there and the weekly trend's down and it just gaps down like it did back in middle of last year. You know, you've just bought it on the break back up. You're trying to pick the bottom and then gaps down and you get caught holding this crappy position for a while. That's the last thing you want. You want to see signs of strength. And actually, if we just draw one thing, I'm just having a quick look at whether or not we're on the right side of it just yet, or it's early stages of a turn. Yep, okay. So that, for me, is early stages that buyers are stepping in. Okay, it's cleaned out a lot. This moved down, pop, down here. People got jack of it by then. You know, when it took out this level to around 70 cents, they'd had enough. But the selling looks like it's dissipated and buyers are potentially stepping in. Held a higher level here and we're broken out of that downtrend. Doesn't mean it's going up. It could mean it's just going to consolidate for the next 6 months. So you want to see, ideally, I'll take that back one step. I think this is your key level through around 65 cents. We can bang around between 50 and 65 cents for the next 6 months, like I said. If we start to lift and we pop up through 65 and then we pull back to the MAs, by then you do expect that MAs are crossed up on the weekly, pull back, and then you're looking for your daily entry. I think it just means that you're buying when the market's rising rather than trying to pick when it's rising. I mean, you could probably buy it down here, come back and down and retest, and you're not wrong, but you have to sit there just seeing going between profits and losses for the next 6 months if that's what's going to play out. But if you're buying when it's on the rise and you've got the momentum behind you, then you can just watch the gains hopefully build up. Anyway, I think that's Sigma, but that one, I think early stages, just like I'm saying on the weekly, if you're buying on the daily here, you probably wouldn't want to buy it because you're going to headlong into that 65 zone. You got a couple of cents up your sleeve. Maybe risk is commit at 56. I think that's a bit, it's not 2 to 1, is it? So you might have 3 cents gain potentially if it reacts off that 65 zone. And what's that, 7 cents loss. So it's 2 to 1 the wrong way. Does that make sense here, guys? So I think this one, Sigma, just keep an eye on that one for now. Well, I would anyway. And just see how it plays out. But if we can get up, if we just blast up through, which would be a good sign when you're a bit overbought there, and the market chips straight through 65, goes to say 68, and then you have a bit of a pullback, that's going to be good because then we've just popped out. Maybe it trades to 70 and then pulls back, and then you'd be looking for that higher low for confirmation. The higher low is confirmation that buyers are stepping in at higher levels, and it's going to get some sort of momentum starting. And then you're nice and early into that trade, and then you just really from there, if it starts to play out nicely, it's holding higher levels, then you just look into those resistance zones where you either take a partial or you could run into some trouble. All right, that's probably it. I think we've got through them all. ELO, we've gone through them all. Is there anything else you want to quickly look at? Or we're all happy? I haven't had a coughing fit, so I'm pretty happy. All right, I took a loss. It was 1% profit. Ended up. Yeah, actually, now that you said GRU, I was just looking at GRR as one that's dumbfounding me. This is one we had. We had that little pop up there, and I'm pretty sure we booked a gain on that. But I would have thought Grange would have really kicked off, you know, with iron ore ticking along nicely. And you see an FMG, all the others are kicking on nicely, but this one just is struggling. And I think the weekly looks great, but it just keeps washing people out. You know, this little pop up here the other day, taking out the previous highs by 0.5%, and then falling to finishing lower. Is frustrating. So this market's consolidating through here, or GRR, Grange is consolidating through here at the moment. So I would have liked to buy into it, but I'm just suspect. Why isn't it showing the strength that other shares in its sector are showing? Anyway, we've got BAP, BAP. So BAP is looking like it's found a base through. So it's probably a few steps ahead of what we were just talking about with Sigma. SIG. Nice too, actually. So if we can draw that one up. So you've got lows through here. Okay, so you can see the market's trended up, pull back, consolidate. So this is your key longer term lows. Started holding higher levels before we got this run up to the highs of about $8. We've had a deep correction, which is a bit of a shame, but yeah, that's what happens. Comes back, corrected lower again. And I think this is your line in the sand at the moment to build a higher low, and that's because we've just taken out, say, the $6 level. I'm guessing $6 on the daily. You can see it was starting to lift again. So really, that potentially another higher low at around, give or take, 540 thereabouts before we're starting to lift. If we just go back to the daily, I think that's the level, isn't it? Yep. That's 775. Just want to make sure that's all right. Yep. Snap. Just want to draw that daily. You can see that was your high. Market's held lower highs. Even if it's probably hard to run across those highs, but even if it was there, you're broken out. There, you're broken out. Across here, either way you look at it, it's broken out and it's looking like it's starting to hold that 540 mark. And we're lifting, so we lifted up here, pull back, retest, inside high low. This was a cracker if you bought it. You can see test, wash out, test again, higher level just in here. Buy on the breakout there. The thing is, you've probably anticipated that it's broken out of that downtrend, but I mean, as it played out, it did break up through there. This is your first time it's popped up. So for me, I'd just be looking for that maybe higher level to buy into. But yeah, I think it's definitely on the rise. Nice one, Paul. It's a dog GRR, yeah. Quarantine me. I just still got that husky voice. I've heard it was cool. That's why I keep coughing, just to keep it croaky and keep it cool. All right, so that's back call. Yeah, it looks like it's going in the right direction. All right, that's probably it there, guys. I think we'll have to call it a day. Just ticked over the hour. I hope you enjoyed that. If you did, it'd be great if you could leave us a like at the end of the stream on YouTube. Much appreciated. Tell your friends, pass the word around. Any questions, if we've missed something that you wanted clarification on, just send us an email to support@tradesetup.com.au and I'll get back to you there. Yeah, any questions at all, just shoot us an email. Hopefully we go all right for the rest of the week. We're down 24, so we're making back some of those losses. We've probably halved the losses for the day so far. We're down 45 to 50 points, maybe more than 50 at one stage. Yeah, but we're bouncing off that low. 66.41. What's the lows today? 66.38. So we just traded through those lows, and we're bouncing. That's not a bad sign for the bulls. Yeah, we'll see how that goes today, which is not so bad at all. And you can see the pressure down. We've got this move down here, deeper correction, and we're holding higher levels. It'll be interesting. I still think we're going to gun for those highs and trade into all-time highs. That would be awesome. All right, guys, thanks very much. Have a great rest of the week and a good weekend. And we'll see you again on Monday. Same bat time, same bat channel. All right, guys, cheers. Enjoy. Bye.